What's up, guys? Welcome back to DCA. So what we're going to do in today's video is take a look at Bitcoin. Now, we all know after the FTX debacle, we fell down to around 15.5. And since that time, we've rallied all the way north of 30K. And now we're sitting at around 29.2. So we've had a fairly large correction today. So far, we're down around 4%. What I want to do in this video is take a look at a metric which I think is very telling as to what we may expect going forward. I think that what we're going to look at here is really going to give you a clear indication of the strength of this move and what we may expect going forward. So if you guys like this type of content, don't forget to hit like and subscribe. Just going down and hitting that like button, guys, the DCA index, all of the trading view indicators we've created, Polarity Digital, all of this stuff that we've created for the community, just hitting that like button shows your appreciation, and I would truly in turn appreciate that. So with that said, guys, let's do it. So, as we said, we're looking at the price of Bitcoin here, and we're just on a daily chart. You can see that we've had two significant rallies since essentially the beginning of the year. If we just come from January 1st here, we were sitting at around 16.5, and we have rallied up from that point at maximum around 90%. So Bitcoin is essentially year to date up around, at the moment we've come down a bit. So we're up around 75%. But year to date, Bitcoin at its peak has already rallied almost 100%. So this is no small move. Anytime you have a move like this, you have to question what is driving this move forward. So this is the metric we're going to look at today. And this is the price volume of Bitcoin. Now, if you don't know what this is a very simple metric. It's essentially just asking, what are the actual number of dollars being transacted on Bitcoin every day? Because if we just look at volume, you're going to have vastly different amounts of volume traded over periods of time. So, to put this in perspective, here we have the volume traded of Bitcoin, a standard volume chart. And here we have the price volume. So if you just looked at the volume, it looks like Bitcoin was most often traded back here because this is your highest volume point. But in fact, we can see that from that point, from this highest volume point, Bitcoin is up around 10,000% in daily volume. So looking at the volume itself doesn't really tell us much, especially with an asset like Bitcoin that has had such a dramatic increase in price over time. So what I want to do today is take a look at what we expect with volume versus price during these big price moves. So we've seen, the price go up 100%. What would we expect the volume to do? So what is a positive sign, a bullish sign for the market, and what is a bearish sign? Let's start by looking at each of these price rallies here. And this chart that I'm going to show you here only goes back to 2017. And that's for the fact that I've actually created a metric which is showing you essentially the majority of all Bitcoin volume. So we're looking at USDT trades. We're looking at all the major indexes, combining them into a single chart because we may see that USD volume has declined over time in terms of trades on Bitcoin, but USDT volume has rapidly increased over time. So we need to be able to take account of both of those, not just one or the other. So that's what we're going to be looking at here. So you can see that, this is that 2017 rally. We're kind of looking at the tail end of it here because we're looking at the end of 2017 into the market peak that we hit at around 20K. And you'll see that volume is increasing. Conversely, when liquidity in the market is drying up, because remember, this type of thing is essentially a measurement of liquidity. If your volume, your price volume is increasing, that means the number of USD or USDT being transacted on the asset every single day is increasing. And as liquidity increases over time, you're expecting that a very volatile asset like Bitcoin is probably going to increase in price as well. And that's what we see. Now, you'll notice that there are periods in time where volume increases like here, but that lines up with this point here. And these are going to be big panic selling events. And you'll notice that these kind of come each time. So here's a spike in volume right here in May. And what happens? The price tanks. All right. Here's another one at the COVID capitulation event, a spike in volume and the price tanks. Anytime you see a big spike in volume, a single point in time where there's a spike, that can typically be seen in a panic selling event. But when you see the volume slowly increasing over time, right? These are typically consolidation periods leading you into the next bull run. So let's look at our price peaks. And we're talking about 2017, like we have right here in 2017. Okay. We have a peak here. We have one in 2019. And remember, we're talking price peaks here. Then we have this early 2021 and our later 2021. And notice what happens in each one of these instances. And, I'm going to bring you over to this chart to look at 2017 because, stable coins weren't really used back in the early stages of 2017. So here we're just looking at the USD volume. And what do we notice with the price volume? And it's just, very clear. Liquidity is increasing in the market, and as such, the price is increasing. So you see that essentially from 2015 all the way through 2017, the price is rising. And during that time, you're seeing a steady rise in the price volume. Now, I want you to take note of something right here. We see a big price spike right here during this period from May 2016 into June of 2016, right? And we get all the way up to around $775. And what happens? Well, the volume just drops off a cliff. Okay, it drops off a cliff over the next, from essentially the end of June all the way through August. And what happens to the price? Well, in the grand scheme of things, we know that it's not a big deal, but if you're living it at that exact time, it feels like a big deal, right? If you have an asset and it goes down 40% in just about a month, it's going to feel like a huge drop off. And so as our volume or our liquidity is decreasing, so too does the price, right? And notice that in this case, you had a very, I wouldn't say it was just a cliff drop here. You kind of slowly were just losing volume every single day, right? It's kind of slowly tailing off. And let's look at how much the price volume dropped in that time. So around 90%. There was a considerable drop off in the amount of liquidity in the market during that time. But in the broader sense of what was happening, what did we see? Price volume was slowly increasing, and as it was increasing, the price tended to increase over time, right? As we said, and that's because the market liquidity is increasing. All right, fine. You get the main concept here. So let's just run through this real quick. We saw the same exact thing in 2019. Notice that we hit this price peak, and then volume dropped off, and so did the price. But notice that typically these kind of go hand in hand. As the volume is dropping, the price volume, you're tending to see the price kind of fall off with it. As this is dropping, you watch the price go from up here at around 14K all the way down to around 54K. And we won't count the COVID capitulation event as being part of this because that was a black swan event, kind of unrelated to what was in general happening in the market. So we saw our price drop as our price volume was decreasing. Then what happened? It was just like back here in 2017. Remember, we had this big drop off, and that led us into our slow recovery, which took several months. We took August, September, October, and we didn't get back above that price until actually all the way out here in the beginning of 2017, or maybe the end of 2016. So it was months. We took a whole 6 months after we had this big rally where we came from around 450 up to around 750. And remember, that's actually less than the rally we've just seen, okay? And put that in perspective. The market cap of Bitcoin was minuscule back then compared to what it is now. And even then, a 100% rally was pretty much all you got. You got less than a 100% rally. And then you got a big drop off in volume and followed by a 6-month recovery phase. So we did the same thing in this cycle. In 2020, the volume increased over time and we saw our price peak. We got a big drop off in volume with a single rally kind of intermixed in there at the end of 2020. Kind of a fake out rally because ultimately most of that rally was going to be just money shifting around in the market, people that were already in the market. And that's been proven by the number of active addresses. We've shown that many times. The number of active addresses didn't really increase into the second part of 2021. So there weren't new people coming in. It was all the same money, people taking profits from altcoins, moving them into Bitcoin. Then Bitcoin ran up, and what did we do? we moved our profits from Bitcoin back into altcoins. And then kind of at the end of 2021, you saw the altcoins go on a rally. Then the whole party came to an end. 2022 started, the Fed started raising interest rates, and we slowly started to see the price drop off. At that same time, the volume, while it did correct somewhat, it was nothing like we saw in prior cycles. In our prior cycles back here in 2017, let's take a look at our price volume at that time. We saw the volume from its high go down around 97%. Consider that. That is just an extraordinary amount of drop off in volume. That means, for every $100 being traded on Bitcoin up here at the peak, there were only $4 being traded on it. So that's just an absolutely insane drop off in the the amount of volume being traded on an asset in just about a year's period. Okay. So we obviously went on to recover a lot of that volume that we lost over time. And that's why we saw our price increase. So coming back to this, now I want to, I'm kind of leading into what's happening now. So we have seen that here in 2021, the volume, yes, it dropped ever since our bull market ended, but Bitcoin has maintained to a rather high degree the amount of volume traded over this time period relative to what we've seen in prior cycles. We have not experienced even close to the type of drop off in this cycle. So at worst, we've got down to around 81%. But if you just looked at our average where we've probably been at around a 65% drop off, a 60 to 65% drop off, which is not that bad when you consider the fact that there was just an enormous amount of people who came into this market. And at the end of this cycle, we were doing a large amount of volume every day on Bitcoin. And to only see around a 60% drop off is not that bad, right? Right? We were well below that 60%. So if you look at what a 60% drop off was in the last cycle, that was kind of like a resistance level in the last cycle, right? We never got back even to that 60% volume level. We were consistently below it. So what you've seen Bitcoin do in this cycle really says a lot that, there are many more people invested in the asset now with a firm belief in the asset because we've, fairly regularly held this 60% level. All right. And in fact, many times, we've got to 40%. And then, if you go to the FTX event, and remember we said black swan events will often come with a high amount of volume. So you have to take those with a grain of salt. But we were seeing volume in here ever since we got down to around 20K. We were seeing volume that was very closely approximating what we were seeing back here during the peak of the bull market. And that's a positive sign in general. Okay. That means there's still interest in the asset. You have to remember, this is all a liquidity game. If there's money flowing around, eventually it's going to catch on and you're going to see rise in price. All right. So now let's jump to what's happened recently. At the end of 2022, the price got all the way down to 15.5. We were sitting right at around that 17K level, anywhere between 16.5 to 17.5. And we've pointed out many times now, there was a lot of accumulation going on during that period. And, we looked at the supply distribution and I showed that there's a huge amount of acquisition of Bitcoin that took place when we were sitting at this 17K level. And we started to see the price volume increase. So early 2023, we're seeing a huge amount of volume increase. So, just to look at a relative increase here, our price volume went up over that month period from the end of 2022 into 2023. It went up around 200%. All right. We saw that basically continue. We got north of 200%. We went up to around 250%. Price then is sitting at around 24K. So, in terms of what is our price increase been, we're up at around 60% at this point. Okay. Then we go on an even bigger spike when we get up to 30K. Our price volume in this period from the beginning of the year to right here was up 400%. That is huge. That's significant. That indicates a lot of people are coming in and there is real acquisition of Bitcoin occurring during this time, right? And what did we say? This is a perfect illustration, guys. Your price volume is going to essentially be your measurement of liquidity. This is telling us that people are coming in and buying. Bitcoin is undervalued at 17K. It's undervalued at 20K. It's undervalued at 25K. And then once we get up to right here around 30K, well, price volume kind of hangs on for a couple days, 28K, 29K, we're approaching 30K. And what has happened in the prior month? Over the last month, what have we seen? The price volume of Bitcoin absolutely drop off a cliff in an unprecedented fashion. So I'm going to zoom out here, and this will just give you an indication of kind of what's happened. So we're going to look at prior periods here where the price volume has kind of plummeted off a cliff like we've seen right here. So in just from this period right here, March 18th to April 18th, we have seen a drop in price volume of 84%. In fact, if we just put a horizontal line here, our price volume has not been this low other than back here. You have to go all the way back to December of 2020 to get back to a point where volume has been this low on Bitcoin. So the fact that we are still above 29K, given the fact that over the last month, the volume has absolutely eroded and plummeted down to these levels, is absolutely amazing. I think it's astonishing that the price is actually still holding up. And if we continue to see the price volume sitting at these levels, I think potentially you are getting an advanced warning right now that typically you don't get. Because if we look at prior points in time, so we don't have many instances in the past where you actually get to continue to see your price kind of hang on as the price volume is precipitously dropping like this. Maybe right here in 2019, you had, this range where from, anywhere 9,400 up to around 10.5, where you kind of hung in that range as the price volume was dropping. But what eventually happened? You fell and you fell, and you were, even prior to the COVID event, you were down around 50%. That was a slow winding event though. This took place over time. We're talking from June here until maybe around right here until January. So you had around 6 months there. Okay. In this case, you were seeing this this drop off in volume ever since it's like we hit that 30K level and that was it. People stopped buying Bitcoin. And who can blame them, right? We're up, currently we're at around 75%, but we were up nearly 100% year to date. And so, I think this is something, I'm not urging you to go on and panic sell, because I'm going to close this with my thoughts on what this means exactly. I'm not urging you to panic sell. I'm not even urging you to sell. I'm urging you not to panic, I suppose. You don't want to panic in the face of something like this because we know this is happening. So, okay, we've identified it. What can we do about it? What does it mean? Well, I think what this means is this is kind of a classic pattern that you see in the setting of a lead up to a bull run. So, like I pointed out here, and this is why I wanted you to take special consideration of this event here, right? This event right here, because what happened? It's very similar. We saw, the volume kind of sucked all through 2015 into 2016. Price action was a little bit better at the time, but we saw the volume just kind of drop off a cliff here, right? Like right here at this 2016 in the, in June of 2016, we saw price fell, volume fell. But what did that kind of lead us into? And it led us into the eventual accumulation phase. That led us into this phase right here where we slowly recovered, price volume slowly recovered, price slowly recovered, and then we eventually went on to make new all-time highs. Now, recall that at this time, we were leading ourselves into the next bull run. This event may play out much faster than what we're sitting on right now. I don't want you to think just because inflation's coming down, that means that the market is about to recover. Because when inflation starts coming down, I suspect it's going to come down because the economy is leading into a recession. When the economy leads into a recession, that's typically indicative of the stock market kind of, heading down. And we've shown, I know Coin Bureau says on every single video that the correlation with the stock market is lower than it's ever been. That's simply not true. The correlation with the stock market is much higher than it's ever been. Okay. So if the stock market starts heading down, I think you're going to see Bitcoin need more time. So I don't want people to think that, I'm not saying that we're going to go make new lows. I have a tough time thinking that from where we're sitting at, we do go on to make a new low. Especially, I think you're going to see some money leaving altcoins as there's more SEC scrutiny being put onto those altcoins. And I think you're going to see some of that money coming into Bitcoin because we do know that Bitcoin is a commodity, it's not a security. And so Bitcoin is going to be safe. I think you're going to naturally see some of this money is going to be starting to come over to Bitcoin. I think what we're looking at here is this big drop in price volume, a big drop in market liquidity. And unless for some reason, something causes this to rapidly recover, I think you're going to quickly see that the price is going to have a hard time holding this 30K level. If simply put, if no one's, if there's no liquidity, if the liquidity in the market has dropped off to this degree, it's almost a law of nature that the price is going to have to come down towards this lower liquidity level, which typically means for a highly volatile asset like Bitcoin, you're going to see a drop in price. So I don't know if that's going to play out like that or not, guys. That's what I'm watching right now. And I'm going to continue to watch this. I'm going to watch this particular metric every single day until, we have some type of resolution. If the price does come down, if it continues to fall, that will sort of confirm my suspicions here. And, like I said, you have very few instances where you can show me that the price volume kind of drops off and there's not some sort of commensurate movement in the price. So I don't know if for some reason something is causing this particular move in the market to be different. And maybe that's so. But I'm not seeing what that might be, especially when a lot of macro events right now are starting to, we had that kind of this beginning of the year celebration where everything was looking great. The market was doing all right. The Fed was starting to slow down on the interest rate hikes. But now there's some indications that things could be looking shaky again. And so, I think that's why you're seeing this. People are starting to take their profits. And I can guarantee you that if you start to come down to some of these lower levels, you're going to see people that were bought in down here at that 17K level. You're going to see them pull the trigger and sell, and, just lock in the safe profit rather than risking it, watching the price come all the way back down to their cost basis. So that's what I'm going to be watching, guys. This metric is available for free on the Discord channel. So if you're interested, you can go there and download that. So with that said, guys, until next time, as usual, see you.